you are good. And now today I want to take you through a very important area, which I just realized that even some of the people who are trusted to be having financial literacy, or like people who have pursued maybe courses or maybe areas or faculties that are dealing with finance or accounts, are actually not understanding. I don't know whether they may be. So before I begin, just like previously, yes, I want to request you, please, yes, when you meet this video, just show your support there by maybe you can comment, then apart from commenting, you can also, if you're not following me on any of these platforms, wherever you will meet this video, please kindly just follow, because when you follow, you'll be getting this update in a real time. Then another thing I want to say, even if you are not financially literate, don't blame yourself. This issue with financial literacy is it's a big deal anyway, especially in most of African countries. Yes, so I just want to play my part in this war of in this championship of promoting financial literacy. Now, to just quickly start, I want to ask you a question. Okay, actually this question is usually, I can say, is a grade 4 question. But let me just ask you, I know many of you won't even really get the actual or the accurate answer. Now, my question goes, which one among the following is the main role of a bank in the financial system? Which one of the following is the main role of a bank in the financial system? What is the main role of a bank in the financial system? Now, choice 1, it's actually a multiple choices question. Choice 1, credit creation. That is A. B, offering a saving platform. C, facilitating payment and settlement. And D, safeguarding valuables. For example, gold, your title deed, your credentials. For example, maybe your academic credential and testimonials. Yes. So among the options, or among the multiple choices that I've given, which one do you think is the main role of a bank in the financial system? Of course, these all of them are roles of bank, but which one is the main one? I want to give you like 30 seconds to ponder about it. Then we'll see whether you shall have gotten it or no, or not. All right, I think you've pondered upon it, but now what is your answer? Okay, maybe you will let me know in the comment section, in the comment section, whether what was your answer before I mentioned mine, and if indeed you understood all this concept the way I'm going to explain, or I'm going to explain. So before even I give you the right answer, I want to elaborate on these roles of banks in the financial system. The first choice A is credit creation. What is credit creation? What is credit creation? Yeah. So those people who are not really into having financial background, or your faculty is not finance, you might find problem understanding what is credit creation. So credit creation is the process by which banks create money in the economy by lending, by giving loans. Okay. So if maybe I elaborate further. Now credit creation happens or occurs when you go seek a loan. Now when you go seek a loan, the bank will give you the bank will credit your account with the equal amount of the loan awarded. Okay. So remember that the money that you've been given is not given handed out to you in cash. So it is being sent to your bank account. Okay. Then it means that at the same time, bank has not reduced their cash they have with them. So they have just created a figure. They have just created a figure. They have just given you money, and they have not reduced the cash that they have with them, or the deposit that they have with them. So your account will be credited, and with them they will do what? They will debit your account with them, and your account is credited. So you will use this money maybe to do what? You will use this money to do some transactions. You can use them to maybe do payment, maybe pay another person in a different bank. Now when that happens, the money will be sent. When you pay another person having a different bank account, that money will go to what? Will go to that bank. Then once that bank has received that money, they will do what? They will again use portion of that money to do what? To lend. Do you understand? Because when you pay that person, that money might be can either be go to savings account or current account. So it means the portion of that money can be used in doing what? In doing lending other people, giving borrowers. Now you see that it's the same amount of money, but now it's now spreading. So that's what we call credit creation. So we'll having various phases, phase 1, phase 2, phase 3, as that money continues in the economy. So you see that credit creation is just multiplying money in the economy. So that is what we call credit creation. Okay. Yes. Another for saving, you understand, or savings, you put your deposit in the savings account for a deposit for a interest rate consideration. Then facilitating payment and settlement. Of course, these huge sums of money you can't really transact through mobile services. For example, you understand Safaricom. Safaricom M-Pesa, the payment. The maximum you can transact in a day is 500,000. So what about if maybe you want to settle a bill worth 1 million, or even 2 million, or 1 billion? So you see, it's not possible. So that's why I'm saying that that's where now bank come in to facilitate this transaction to happen. Yes. So when you do the payment, then they will debit your account with the same amount, then credit the person's or the recipient account with the same amount. So that's what the basis of payment and settlement. You pay, then they settle the transaction. The other person get credited, and your account get debited. Okay, so debiting just means reducing the amount that you are having in your account, and crediting means that they are increasing the the amount you're having, the disposable amount that you're having, or the amount that you can transact with. Then safeguarding valuables. Maybe you have gold. Yes, you can you can have the gold. You can safeguard them. You can put them in what? You can put them with your bank. Also, you can talk about your documents. Maybe valuable documents. Maybe title deed and all that. To avoid the risk of maybe burning them in your house. You can usually you can give that services to your bank. So that's what we call safeguarding valuables or custodial services. Yes. So among these ones that I've explained, which one do you think is the main reason, is the main role of the bank in the financial system? Now, my answer is choice C. Facilitating payment and settlement. That is the main role of a bank. Okay? And I want to explain, because if you don't understand this, that is the main reason, that is the cause why, that is the main cause of financial problems or the financial difficulties that majority of us do experience. Why am I saying so? Now, I want you to pay more attention. I want all listen keenly to this elaboration that I want to give. Just as I said before, I'm not saying that these other choices or these other points are not correct. All of them are role of a bank. But the main role of a bank is facilitating payment and settlement. Now, the reason why I'm saying this, or the reason why I want to rule out these other options as not the main role of a bank, is this. Now, credit loans. Now, everyone knows that if you want to get affordable loans, then affordable loans. I'm not saying that you go look for loan, because I will also explain that loan for consumption is treated as bad loan or bad debt. So we all know that the main the financial institutions that will give you loans at reasonable or affordable cost is SACCOs. So that's the main reason why we do join SACCOs, so that we can get affordable loans. But mostly here also people make mistake, because they join SACCO for loans, and the loans themselves not for projects. It's not for business. They take those loans for consumption. Maybe somebody taking loan to build a residential house. Yeah. So bank loan is the most expensive loans. Okay. Actually, currently, bank loans rate is between 17 to 19%. So bank loan is the most expensive type of loans. Yeah, so that's why it's not recommendable that you take bank loan for consumption, even if it is emergency. So that's why I'm ruling out credit creation or lending as the main role of a bank. That is not the main role of a bank. In fact, if you go that way, you will tell me later, you'll be having some problems. Yeah, so bank loan is the most expensive type of loan. Now, another one, offering savings platform. I know majority are saving in a bank. My dear people, you are really making a big mistake, because bank will never benefit you as a saver. Okay? Bank will never benefit you as a saver. If you want to save, bank is not the best option for you. And I want to explain this. I know so many of you don't know. And even holding money in the current account is not the best option for you. And I want to tell you the best options, or the avenues that you can use to actually don't fall a prey to this. Now, I want you to, before you do savings or any type of investment, I do recommend that you understand you have to understand the business model of that particular institution or financial institution that you want to do savings or invest with. Now, just I want to explain this business model of a bank. Leaving others, I just want to pinpoint on one, just one, the main one. Now, bank, usually we know them as financial intermediary. And if we say bank is a financial intermediary, what does it mean? It means that they mobilize savings from savers. They accept deposits. Then the deposit that they have accepted, or the deposit that they have gotten, they use those deposits to lend. They lend business people after doing a thorough credit analysis or risk of the borrower. So then, after they have given the part of the deposit they're having to the borrowers, now how are they benefiting is what you need to I want to explain here. You see, when you save in a bank, they will benefit from the difference between the interest rate that they charge borrowers and the interest rate that they pay, or they pay the savers. So the difference will be one source of revenue to banks. So if you are in this business and you know that the difference is what will form source of your revenue. Now, and for let's say for lending rate, maybe there may be a cap. Maybe let's say CBK has rolled out that maybe you cannot lend up to over maybe 19%. Let's say, for example, cap is 20%. Now, what will happen for them to ensure that they have revenue? What they will do is that they will reduce, as much as possible the interest that they will give you as a saver. Okay? So let's say, for example, if you are saving in a bank, then they give you maybe an interest rate of let's say, for example, 9%. Then from this they give you 9% per annum. Then this from this deposit, that maybe if this fixed deposit, then from this deposit they will use this money to lend someone maybe at the rate of 19%. Okay? So the difference between 19 and 9 will be part of their revenue. Okay? I'm assuming that the rates I'm talking about are inclusive of all the other charges, the VAT and all that. Yes, all the tax charges that might be applicable in here, and all other charges incidental to this type of borrowing. Now, this is the main reason why when you save in a bank, you will never achieve your goals, because this money they give you, they pinch what they give you, then they pinch both parties, both the borrower and the saver. Now, borrowers, they will pinch big balls. Then for the savers, they give them something small, because they don't know the use of money. They know how they don't have. It means that they are trying to tell you that you don't know how to use your money well. So they take that advantage. They give you something small for not knowing how to use your money well. Then they demand more from that person who need this money, who knows where to put this money. because they know that person also, if it is for business purpose, they know what that person is stand to get from the money. Yeah, so that is how banks work. So when you put your money, or you put your money in fixed deposit, or you leave your money in the current account, which is the worst option, because when you put your money in the current account for the liquidity purposes, you will be facing this problem. There is what we call CBS, and CBS is just core banking solutions. Okay, now for that your money to be safe in that bank account, these people have systems, which we call financial systems, and these systems, they outsource from fintech companies, or vendors. Fintech companies. Fintech means financial technology companies. Yes, financial technologies. So being that they are vending, or they are outsourcing this service, they are outsourcing these CBS, core banking solution, or core banking systems, they pay for them, and they pay heavily for them. Okay, so when they pay for this, the bank themselves, they don't meet this, they pass this cost to you. So if you are having your money in the current account, then you will be paying on a monthly basis what we call GL cost, or bank maintenance charges. And if you've been keen enough to look at your monthly statement, you will see those charges, and all those charges are on rate basis. The more you have in the bank, the more you pay. Okay, so if you put your money in the current account, for instance, now bank charges are here, they deduct. Apart from bank charges, there is also a silent thief that I usually allude to, the inflation, which is the meaning, or the depreciating, or depreciating value of money. Or we can say that the reducing of the purchasing power of money. For example, what you could let's say in 5 years, five years back, or 5 years ago, the quantity of commodities that you could buy with 5,000 is not the same as the same type of commodities, same value and everything. You won't buy same quantities with 5,000 now. Why? Because of inflation. So you will be paying with 5,000 that you could maybe buy, maybe let's say 10,000 commodities. Now you can even buy less, maybe 7,000 commodities of same quality, everything same. So it means purchasing power of money has gone down. So when purchasing power of money comes down or reduces, then we say it is inflation. So for you to keep pace with inflation, you need to put your money into a savings account giving interest rate which is higher than inflation rate. Okay, so if you don't obey this, then you will be a victim. So that one will rule out this option of offering saving platform. So bank is not the best way to save your money. So if you want to save, maybe we say that if you want to park money for a certain project, maybe you want to save, you want to build house, maybe you want to start business in 5 years, 2 years, 3 years, maybe you are saving for school fees, maybe you want to save for a vacation, whichever project that you are saving for. Don't save in a bank, please, because I'm telling you this for free. They will never. In fact, one of the roles of bank is to offer advisory services, but I don't think they will tell you this. They will never tell you this, because that is the basis of their business. So don't save in a bank. Now, where can you save? Now, Being that I've given you the business model of a bank, I want also to give you another business model of a different financial institution. Okay? And this is not new. Maybe you've heard of it. Maybe me speaking or any other person speaking of it. Fund managers. The best place to save is with fund managers. Yeah. Now, for liquidity purposes, you can put these funds in what we call money market. And I will explain why I'm saying this. I'm not like insinuating, like I'm not like trying to okay, I'm just talking about facts here. I don't want to maybe lean on one side. I want to talk about facts, just facts only. Now, the reason why I'm saying you should save with fund managers is this, or CIS, collective investment scheme, is this. This is how this CIS work. Now, you see, for bank, I told you that they make money. One of this revenue source is the difference between lending rate and what? Yes, between lending rate and the amount that they the rate that they offer for savers. Now, when you come to CIS or when you come to fund managers, this is how they do it. You pull fund. After pulling fund, or you buy unit. So after buying unit, this money that you have pulled is going to be invested. Now, once this money has been invested, the return that they get, okay, they take 2%. And also, the management fee, that this 2% is called management fee. And this management fee is regulated by Capital Market Authority of Kenya. So it means they can't exploit you. Okay? It is regulated. It can't go maybe to 3%. It cannot. It cannot. It is capped. You understand? So, once they have deducted this 2%, the rest is yours. Do you understand? So let's say, for example, if they invested and they got a total of 19%. So from this 19%, they take 2%. They are 2%. What is remaining is 17%. Now, this 17% is yours. It is being, this 70% is yours. But there is what we call withholding tax. And of course, on the bank side also, I told you that there are other charges that maybe you don't know. Now, this 17%, they remove withholding tax, and for those people who are having what we call tax exemption certificate, you want this 17% will all be credited to your account, because you are exempted. People who are having the people with the disability. Yes, people with the disability. If you have the card, if you have the card, then you are exempted. So once you provided the card number and all that, you won't be taxed. But for those who are not having the what we call tax exempt, okay, those people who are not tax exempted, you will pay 15% with 15 withholding tax. So even if you remove this, the withholding tax of 15, then what will remain? Let me just calculate and see. So that is 0.85 times 17. Yes, you will remain with a net of 14.45%. That is net after tax. And this one is compounded. And I told you that banks, they don't compound interest. Their interest is simple interest. So this is compounded. So for example, let me just give you an example. If you save, you are saving with, or maybe you are saving with what? With the fund manager. Let's say, for example, 100,000. If you have 100,000 with the fund manager, the minimum interest that you are supposed to expect minimum is 1,000 per month. 1,000 per month. And if you have 50,000, the minimum you should expect is 500 per month. I know probably you've been saving with your bank. When you save 50,000, have you ever gotten something like 500? So the more the principal, the more the interest. You understand? So I'm opening your ears. Don't hold money in bank account. Don't save in a bank account. I'm helping you. Now, another reason why I hope you've understood the business model of fund managers. I've told you that they don't touch on your principal amount. They don't touch on it. But for banks, they will touch on it, because even current account doesn't accrue any interest. But they will charge the maintenance cost. So where is that maintenance cost charged from? It is charged on your principal. So you understand? Yes. So, but when you come to fund managers, they don't charge you. They don't charge money on your principal. They charge money, or they only take management fees. So once you find this video and you've watched this video, I don't expect you to continue having your money in the bank account, because that one, I don't know how I can explain that. I don't know, it's ignorance or what. After having told you what is happening in the financial market. So here under fund managers, there are investment vehicles or investment instruments that varies from various types of structures. We have the most liquid one is called money market fund. So when you have your money in money market fund, it's just the same as you having money in bank account. But the difference is that there is no maintenance cost that you are going to pay. Okay? And you are going to earn a competitive return. So most of this money market fund, withdrawal process is swift, which sometimes I do see it as a disadvantages, because there are those people who are spendthrift. They have no money discipline. They cannot save they cannot have financial commitment. They cannot save. They cannot hold on money. Once they have money, if it is accessible, they have the tendency of withdrawing. You understand? Yeah. So that apart from money market fund, we have what we call fixed income fund. Okay. So fixed income fund is now here. It invests in bonds, and bonds are a bit illiquid. So if you put your money here, then you can only access this money after maybe 6 months from the time of deposit. And this one usually give higher interest rate compared to money market fund. Then apart from this, we also have what we call equity fund. But equity fund, the underlying asset is majorly stocks. But I don't encourage you this, because this risk profile for this type of investment is from medium to high. Okay, because you see now the stocks prices do fluctuate. Yeah, so this one is a bit volatile. Then another one, we have balanced fund. Balanced fund is having the elements of money market, having the element of fixed income fund, and having the element of equity fund. So in short, it is having these instruments. It's a portfolio of all these instruments. There is a bit of a bond in it, there is a bit of stock in it, okay? Yes, and other debt instruments. Yeah, so like I've said, please, for saving purposes, put X on banks, and put tick on fund managers. Now, facilitating payment and settlement. Yes, that is the main role of a bank. Actually, there is no any transaction you can do without passing through bank. All these transactions, they must pass through bank. Okay, so that is the main role of a bank, facilitating payment and settlement. Okay, and that's why they do even help in curbing money laundering. Because you have to pass through them. Even if you do all what you call the layering smartly, they will catch up with you. Okay? Yeah, so banks, their main role is facilitating payment and settlement. Yeah, those wise people who've been involving in these illegal activities, they don't put their money into a bank because they will be caught. Yes, so another one, safeguarding valuable. Yes, that is a role of a bank, but it's not the main one. Okay, because why I'm not saying it's not the main one, these things, even without bank, you can still safeguard it with you have other options. But for this payment and settlement, there is no any other option. You have to go through bank. Okay, yes, all those big deals, worth millions of money, billions of money, you can't transact, or you can't do it completely without passing through bank. So that is the main one. Now, before I wind up, I just want to give you other role of banks. Maybe somebody was waiting to hear this. Now, other roles of bank include financial intermediation, which I've explained, payment services I've explained, risk management. Yes, bank usually nowadays even having what we call insurance. They offer insurance services, and the main role of insurance is a risk mitigation measure. And then also loans. Banks, when they give you these loans, maybe the overdraft can help you in emergencies. And also, yeah, so those are some of that one is also some of risk management is one of role of banks. Creation of money supply, yes, through credit creation that I've explained. Credit allocation, yes, but it's not the best option. Liquidity provision, yes, that's why maybe many people have their money in the current account for liquidity purposes. Yes, you can withdraw anytime without any restriction. Wealth management and advisory services, yes, they do that. They do these services, but not to a low net worth individual. For banks to be your advisor, you must be high net worth. Having maybe 10 million or 10 million and above. 10 million and above, you talk about 500 million, something like that. Then they can be what? They can be your financial. They can offer financial wealth management and advisory services. And also, fund managers do this, by the way. So this one cannot. That's why I'm saying it's not the main role of a bank, because even fund managers and other financial institutions are also doing the same role. Then safeguarding financial assets. Yes, that one I've mentioned. Facilitating international trade. Yes, that's another role. Where maybe if you want to go import some goods from China, you will need a bank to get the Chinese currency. What we call it, what? Chinese is hard. Now, monetary policy transmission. Yes, they help Central Bank of Kenya to pass the monetary policy. Maybe you've heard of base lending rate. The central bank set base lending rate. Then that one is being transmitted or being passed or to consumers through what? Through the commercial banks. Then another one is, yeah. So those are some of Those are some of the roles of banks in the financial, but the main role of a bank is payment and settlement. Now, thank you, and I believe that now you are going to change your mindset on this. Avoid having holding your money in the current account or fixed deposit account with your bank, because like I've said, banks saving is not the role of a bank. Okay, and I've explained. Now, for those people asking me, how can I maybe have a money market account? Actually, if you have money market account or this fund manager account, they don't go dormant like banks. Sometimes if you have not been active in those accounts, you find that they close them. There's being sent a message that your account has been deactivated. It's dormant because you've not been transacting for some times. For fund managers, those accounts don't go dormant. Once they are created, they don't go dormant. Okay, so you can just create. I do encourage my people to have a pocket. If you don't have a pocket, how will you even, if you don't have a basket, even if you catch up or your opportunity gets you on the way, where will you put whatever you've gotten? So always create a pocket, and your pocket here is now the account, the investment account. So please, papas, create this investment account for maybe with fund managers or CIS. Then when you get something, throw. This investment, the fund managers are usually giving you like you can throw any money that you get, any amount that you have. So if maybe you want to create any of these accounts with fund managers, you can reach out to me. I'm sharing this link. You can join this my group. Then from there, I'll be able to take you one by one or give you the onboarding process, taking you through the onboarding process, how you can open money market fund with or any investment or any investments that you might prefer from CIS. And also I'll guide you on the best CIS that you can trust with your money. Yeah, so I'll share that link there, or maybe you can call me. Okay, you can call me. My number is usually on those banners. So for Facebook profile, you will find my number there on that profile picture. There is a cover photo there. That cover photo has my number. You can contact me, or you can use that link that I'll shared below to do what? To join the group. Then from there you can just engage with me on WhatsApp, and I will tell you all the onboarding documents, all the requirements that you need for you to do what? To start your savings. Then once you've piled money or park your money in the money market or fixed income or any of these investment vehicles, you can now start exploring other investment. Maybe ujaribu pale stocks, you try stocks, ikuangushe kidogo or as you learn. Then you can also try bonds. You buy bonds yourself. Yeah, maybe you try treasury bills. All these I have all this information, so you can just ask me any investment that you want to do, even buying land. You just ask me, I will guide you appropriately. So otherwise, thank you thank you in advance for the people who will watch this video, and please share, follow for more. Bye.